QuickBooks Pro Plus Desktop 2022 Rental Income Estimate and Invoice. Get ready because we bookkeeping pros are moving up the hilltop with QuickBooks Pro Plus Desktop 2022. Here we are in our Get Great Guitars practice file, going through the setup process with the View drop-down, the Open Windows list on the left-hand side, Company drop-down, Home page in the middle, maximizing to the gray area. Reports drop-down, Company and Financial, Balance Sheet Standard, customizing it up top with the range change 010122 123122 fonts and the numbers, changing that font to 14. Okay, yes please, and okay. Reports drop down, Company and Financial, taking a look at that profit and loss this time, range change 010122 to 123122. And customizing the reports, fonts, and the numbers, changing that font size to 14. Okay, yes please, and okay. Finally, reports drop down again, accounting and taxes with the trial balance range change from 010122 to 123122. Customizing that report with the fonts and numbers, changing that font size to, once again, 14. Okay, yes please, and okay. So in prior presentations, we went through back to the home page on the left-hand side, got the rental process. Imagining we're going up through a rental process. We've got our equipment set up for our guitar shop. We're selling guitars. We're doing guitar lessons. Now we're renting out guitar equipment. We set up a standard items that could be sold then by going to the lists drop-down, item list. We got our standard band set here. And then we've got our add-on items. We're then imagined, closing this back out, that we had a customer that's going to be requesting a guitar set at a future point, and we wanted the down payment in order to do so. That's a prepayment, so we entered the receive payment first before the invoice for this particular customer. So if we were to check that out, and we went to the balance sheet, let's check it out on the balance sheet, double-clicking on the accounts receivable. We then got that $200 payment, but it's not tied to an invoice. We can see that more clearly by closing this out, going to the reports drop-down, going then to the receivables detail, customer balance detail report. And we can see here on customer 5, we got that negative receivable of the $2,000. You might also track that by going into, if a customer came in, for example, and was asking about something, we might go to the customers drop down, the customer center, find that particular customer, customer 5, note that that payment right there is going into the undeposited funds, and that's the one we'd be applying out to. Now, let's go back to the home page. And the other thing we could do, and we could have done this while we made the payment, just to work in the idea and concept of the estimate. So let's say that someone was calling, they're asking about a particular guitar set up. We're not going to create the invoice. The other thing you could do is you could create an invoice just to test out without actually recording the invoice so that you can determine how much to then be charging. But you might use the estimate field as well. So let's imagine we created this estimate at the point in time and then determine the deposit based on the estimate. So if I went into the estimate, for example, and we're saying, okay, I'm going to set up an estimate for customer number 5. And they're calling up on 2/27. I'm going to close up the item on the right-hand side and close up this item on the left for now. And let's imagine they want a band set. So we set up the item to make it as easy as possible. We said, here's our standard band set. That's kind of like the baseline. You got to pay that baseline first. And then if you want any add-ons, you can add on to it. So let's imagine that they want to add on an add-on for a guitar. Let's say they want like 2 more guitars for some reason. We're like, hey, there's already 2 guitars in the set. And they're like, yeah, but you know, what if the strings break in the middle of when I'm rocking and rolling on stage? Then I need like the backup. So with the pre-string setup. So we're going to keep that there. So we'll say, all right, 2 more backup guitars they want and another amp. So they also want an add-on for the amplifier. So they want like 4 more amps, because they want it like really loud. It's got to be really loud. So let's say that's going to be our estimate. So then based on that, then we can then determine how much, and this is going to be a non-taxable item, non-taxable. Based on that, we can then determine how much the down payment would be. We might have some standard setup, like we're going to take 10 or 20% down or something like that, determine the down payment. And if I save and record this is another form, an estimate form, which is not going to record anything to the financial statements, because this doesn't represent us. This doesn't represent us actually doing the job. We didn't do the work and we didn't get paid. Therefore, no financial transactions. This is an estimate that we can kind of think of from a construction standpoint as kind of like a bid or something that we expect to happen in the future. We can use the estimate then to create and populate the invoice. So if I was to save and close this, I'm going to say, all right, let's save and close it. And so you've changed the customer 5 sales tax code for this transaction. This change will reflect your client transaction. Do you want to make it permanent? I'm going to say no in this case. I'm not going to make it permanent. The customer tax code is, hold on a second, we'll keep the tax code down here as the customer's taxable. Switching between customer tax codes may alter, so I'll keep that. And then over here, it's still not applying the tax, so I shouldn't have changed the tax code. So now I'm going to save and close it again. So there we have it. So we've recorded the estimate. So now if we imagine the customer coming in and saying, okay, now I'm going to pick up the information, the guitar and whatnot, and they already made the down payment as we saw in the last presentation, we might then go into the customer center, find that customer, and say, okay, there's the estimate and there's the prepayment that has been put in place. Then you could take the estimate, going into the estimate, and you can create an invoice from it like this, or you can close this back out. And I might go into the home page here and create an invoice this way. If I was to create an invoice this way, then if I type in customer number 5, it's going to then ask and say, hey, look, I have this item, I'm paraphrasing, for the 2,260. So those are the two ways we can kind of apply the estimate out to the invoice. I think it's more likely I'm going to close this out to do the other way, because you might, most likely, if you're working in QuickBooks, someone came in, you can then find the customer center. You can then say, there's the estimate. I'm going to open up the estimate and then possibly create the invoice from the estimate, which would help us to create or populate the invoice from it. The entire estimate has been copied. You can edit the invoice by removing or adding any items. So I'm going to say OK. And so there then is our invoice that has been populated with the estimate. So then we could, they say add on if we want to add on anything more. So if they needed to make changes, they wanted another guitar for whatever reason, possibly we can alter it at this point in time. So that has populated. Now what I'd like to do is apply out the credit, the prepayment that has been given to us. So I'm going to apply the credit up top. The changes to this transaction will be recorded before continuing. So I'm going to say OK. That is OK. And there's the credit. There's the 200 that they put down. So I'm going to say done on that. And there's the 200. So now we have that down. So if this is going to be recorded, when I record this, what's going to happen? It's an invoice, so it's going to increase the accounts receivable. Now, the funny thing is it's going to increase the accounts receivable for the full 2,260, even though they only owe another 2,060, because that prepayment will then net out against it. So we're going to see the full 2,260 increasing, the other side then going to the revenue account. We don't have any sales tax because we're going to say it's not a taxable item, which is driven by the items here. And we're going to say that there's no inventory involved because we're renting and not selling the inventory. So let's go ahead and save it and close it. So we'll say save and close. And then in the customer, we see the invoice on down below. If I go to the trial balance and check it out, we're going to say now that the accounts receivable, double clicking on the receivable, there's that 2,260, the 200 payment above it. Closing this then back out, we're then going to go then to the customer balance detail, and then we'll be able to see that 2,260 and the amount above it as well. So it recorded it for the full amount of the invoice. Once again, note, not the 2,260 that is still due, but it's netting out, so we get to see the detail in the activity of the customer balance detail, the total of this adding up to the 24,236.50, that tying out to what is on the trial balance, the other side then being recorded now as income at the point in time the work was done, or at least closer to it because we're renting out at this point in time. And that's going to be down here on the income statement in the income account for the equipment rental, our new income account that we set up. So there it is, posting it out by the 3 line items that have been added. Closing this out, you can also see that on the profit and loss report with this new line item for the rental equipment up top as well. So now let's go through this transaction and imagine then that we're going to make the payment at this point. So we created the estimate, we made the invoice, we're going to receive the payment at this point as well. So I'm going to say receive the payment from customer 5. So customer number 5, we're receiving the payment. And so the amount is going to be that amount there. And we're going to imagine, I should have said that this will happen on the 28th now, the end. And we'll just keep it at cash. So what's this going to do? Increase undeposited funds. The other side's going to go to decreasing that accounts receivable at this point in time for the amount that is remaining, which is the $2,060. So we get to see the full invoice here, which is the $2,260, $200 already applied, the amount remaining $2,060. Let's save it and close it. Check it out by going to the trial balance. So now we see the undeposited funds. If we go back up to the undeposited funds, up to the 2,060 has been increased. The detail, same trend. It's a clearing account. It goes up and then goes back to 0. Other side, then going to the accounts receivable, double clicking on it. We see then this transaction of the 2,060 for the payment, closing it out, looking at the supporting data and the customer balance detail. Now we're going to scroll back up again. We got the prepayment, then the invoice, and then the payment of the rest of it, bringing the balance down to 0. That's something you can also see in the customer center. So the customer center, now you've got the payment and the prepayment, the invoice, and the rest of the payment, bringing it back down to 0. Let's go back to the customer balance detail. The total of it's going to sum up now to the $22,176.50. That amount also matches what's on the trial balance, $22,176.50. Finally, let's go and transfer this undeposited funds into the checking account. Go into the home page, making the deposit. So we're going to go to the deposit, which now has a 1 in it, to record the final transaction. Checking it off. We're going to record it in the same month here, and it's going to be going out of undeposited funds into the checking account. Save it and close it, and let's check it out by going to the trusty TB trial balance. Checking account should now be increased by that deposit as it is. And then the other side, decreased undeposited funds. Undeposited funds has that trend we expect to see. It went up and back down again because it is indeed a clearing account, not just a temporary account. This is what we have thus far on the trial balance. You can check your numbers with it. If they don't tie out, try changing the date range. It's also often a date range issue if there's a problem. And then, of course, we're going to be doing the transaction detail report at the end to further check the numbers at the end of this section. And then we'll also be hopefully putting those backups together that you can use to rework particular parts of a problem if you so choose.